Private lawsuits could help determine whether digital tokens should be treated as securities like stocks and bonds. Oh, I did forget to mention Flux has ditched Luna, obviously. And they are going to be doing a different parallel asset. I believe it's Cosmos. Investors are asking the courts to decide an existential question for the cryptocurrency industry, whether digital tokens are, for legal purposes, more similar to stocks or gold. Attorneys for cryptocurrency trading platform Coinbase Global filed a motion this month to dismiss a class action lawsuit arguing that 79 of the tokens listed on the firm's platform are unregistered securities. We've talked about this before. The fact of the matter is, from my perspective, a lot of these currencies are unregistered securities. Now, does that mean I want a whole bunch of people coming in and regulating a ton of stuff? No. So I'm kind of at this point of like, let's call a spade, but I don't need the government coming in and taking the spade away. Is that fair enough? The group of Coinbase users is demanding reimbursement for trading fees and market losses and seeking to prevent the assets from continuing to trade on the platform. Outside of enforcement actions, the Securities and Exchange Commission hasn't indicated which cryptocurrencies it considers to be securities, but federal statutes passed in the 1930s deputize ordinary investors to help the SEC do its job by giving buyers of unregistered securities the right to sue the seller for their money back. The evaporation of some 1.5 trillion US dollars from cryptocurrency markets in the past 6 months could give investors a new incentive to test that power. I was just thinking about something. I wanted to clarify it for a lot of the new people that are getting into cryptocurrency right now. If you watch my channel for a long time, you probably already know this. The reason why we're proof of work specifically focused is that we generate revenue over purchasing something in hopes that it goes up. And everything that is happening right now is a repeated process that has happened. History repeats itself, especially within cryptocurrency. This is nothing new. Everything from the bull run to now what we see with the crypto winter and diving down, and then the ensuing lawsuits and projects disappearing. This has all happened before. Nothing new under the sun, and it didn't happen that long ago. And so when you look at this, look at it through that lens of like, I realize this has happened before. It'll probably happen again. And then plan accordingly. The reason why proof of work is something that we lean on a little bit more is, once again, you have an asset that you can resell, albeit probably for lower prices, right? You're hopefully accumulating at the lower prices as well, right? If you time the market, cool, that's good on you. Some people are good at timing the market. I'm not. Right? So you could time it, I suppose, with buying cryptocurrency as well with the accumulation. But at worst case, you're still generating revenue and you're still able to function, and you aren't sitting there being part of the $1.5 trillion in losses, right? And that's the big deal here. Quote, the more money at stake, the higher the probability of litigation. And with the sharp downturn in crypto values, the incentives to litigate have turned up as sharply, said Joseph Grunfest, a former SEC commissioner who teaches law at Stanford University. Lawsuits related to cryptocurrencies are up this year. Of course they are. It's the bear market. We're in the winter. Investors have filed 8 class action lawsuits related to cryptocurrencies in 2022 so far, compared with 11 in all of 2021, according to a database maintained by Stanford University and Cornerstone Research. U.S. laws impose a meticulous regulation and burdensome disclosure requirements on issuers and intermediaries that sell securities, a category of assets that includes stocks and bonds. They also create potentially crippling liabilities for anyone who skirt the law. Cryptocurrency platforms have sought to minimize headache by arguing that the tokens they list in the U.S. are commodities like gold, which have no full-time federal regulator. For trading venues that allow U.S. investors to buy and sell scores of digital tokens, the cost of getting it wrong is potentially catastrophic, industry lawyers say. Quote, if successful, plaintiffs would have the court effectively freeze the accounts of innocent Coinbase users who, by their own choice, transact with another in these tokens, end quote. Coinbase attorneys wrote in the motion to dismiss the case. Quote, other digital assets trading platforms would likely be compelled to do the same, end quote. Once again, I want to bring you back to a little story we talked about with Coinbase, updating, of course, their policies surrounding their bankruptcy. Anything that you have in Coinbase will be used to pay off the debts of that said company, in this case, Coinbase. The assets within that they hold are not yours because you don't control the keys, and therefore they will use that to save themselves first, and you will be left paying their debts. They are clearly scared. There are clearly things that are going to be happening, specifically surrounding regulation and things like this. They are correct that their users, they're going to be basically saying, oh, the users, the poor users, the innocent users of Coinbase, you're going to affect them, will be the only ones that get hurt. And you need to learn to control your own keys. If the project does not have a way for you to control your own keys, then it was never a cryptocurrency project in the first place. If it is a difficult one, then maybe if it is a difficult coin or token to self-custody, then maybe you've learned something about that project and you can dump it, for example. You need to protect yourself. Just end of story. Coinbase's lawyers argued that its platform brings together buyers and sellers of cryptocurrencies rather than transacting directly with users. That would be true, except that you guys changed your policies that say that you clearly are responsible for the custody and that all that cryptocurrency is yours, right? For that reason, its lawyers argue the firm wouldn't be liable as a seller, even if the assets on its platform were deemed to be securities. Incorrect. Because of your policies, it is very clear that it is directly your responsibility for what you list, because you are holding it and you are telling the users that if they purchase it, they are purchasing it within your ecosystem, and anything within your ecosystem is yours, in fact, and not anybody that is actually purchasing it. You are not connecting buyers and sellers. You are a centralized exchange that holds the actual currency. You are the seller of said coin and token. That is infuriating and a bullshit line, Coinbase. And I get it. You guys are lawyers. You're going to go around and make it all difficult for everybody over there to put everything in your favor. But that is a bullshit line based on your track record and what you've said. Oh my God. Because cryptocurrency trading platforms aren't supervised by regulators and clear transactions internally rather than on public blockchains, there is a little transparency into how trades on Coinbase are executed, lawyers and SEC officials say. SEC Chairman Gary Gensler has alleged, without naming companies, on going into further detail, that the platforms trade against their customers. And I think that is true, because as they've directly told us, the cryptocurrency that you purchase on their platform is not yours, it is theirs. It is their cryptocurrency, is not your cryptocurrency. This is not, and this is the thing. If crypto's going to function properly, eventually these services go away. These services should be focused around the trading between the currency and whatever fiat system, and they should follow the rules of that fiat system. But as a participant within cryptocurrency, you should utilize decentralized exchanges as much as possible, if not exclusively, and only utilize exchanges for the swapping out into whatever fiat system you wish to participate in or need to participate in out of necessity to pay your bills or whatever it may be. Coinbase's lawyers also say the cryptocurrencies in the lawsuit aren't securities, but the issuer of one of the tokens featured in the Coinbase lawsuit, Block.one, agreed last year to pay $27.5 million to settle an investor lawsuit alleging that its EOS token was an unregistered security offering. EOS is still listed on Coinbase. Another of the cryptocurrencies in the Coinbase lawsuit, XRP, is the focus of continuing SEC litigation and is no longer available to Coinbase users. To determine whether an asset is a security, regulators and courts apply a four-part test developed in 1946 Supreme Court ruling over Orange Groves. Known as the Howey test, it involves an investment of money in a common enterprise with an expectation of profits derived from the efforts of others. Cryptocurrency advocates say that once a token's underlying network becomes sufficiently decentralized, its value no longer depends on the efforts of an entrepreneur or manager, so it should be considered a security, or shouldn't be considered a security. But the line is often fuzzy and the facts unclear. The line is not extremely fuzzy. Like, we have two examples. We have Bitcoin, which is not a security, clearly. And we have everything else. I'm just Welcome to the Bitcoin Maximalist Show. I mean, like, there are potentials for others not being a security. That's fine and that's fair. I think as soon as anything is proof of stake, it is automatically a security. Almost. All the time. Mr. Gensler has repeatedly said many of the assets traded on U.S. crypto platforms are likely securities. He has urged the firms to register with the agency as regulated exchanges akin to NASDAQ or the New York Stock Exchange. Quote, they know that most of what they have on their platforms may well be securities, end quote, Mr. Gensler told reporters May 18th. Quote, they should move towards getting registered or we're going to be the cop on the beat and we're going to bring the enforcement actions, end quote. Look, I'm going to say it once again. You call a spade, but that doesn't mean I want the government coming in and taking my spade away. I think that's the best thing I can say to wrap that up. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.